kind of curious to hear your backstory again, like, how you came to the version 2 versus version 1, and I'm sure that's going to be part of it, but uh, why why did you want to do a version 2 of it? Like what was the impetus of thought for that? Do you know what I mean?
Yeah, I think as we've grown and as we've taken on new traders, there's kind of a proclivity to get everybody on the same page. Um, we've been using new terms as trade to fund has evolved, and when you look
Mhm.
back, it's only been 12 months, 13 months, 14 months, and so it seems like a lifetime, but that was kind of the reasoning behind it because we've got all these new people coming in, and us as the old OG hot seaters seeing a lot of the same evolution of growth where you're seeing a little bit of timidness, timid, or they haven't gone through this version of the market yet. And so I kind of wanted to go back and revisit and see how have we grown, what have we learned in the last year, and just kind of put that out there again. So
I
I think
just
proclivity is one of the new words too.
one of the new words. I just want to know before we even get started, because I don't want to waste my time, if mashed potatoes is part of your is part of your presentation tonight.
it is not.
Okay.
I don't know what I was thinking. Hold on, hold on. It is now.
All right, good. I'm not going to waste my time tonight.
All right. Yeah,
Okay.
no dolls for the mashed potatoes. Although, well, you never can tell because we're gonna jump into some charts. So,
Well, take it away, Mr. Referee Pete. So thank you. I
all
appreciate it.
right,
I'm excited.
all right. Well, like always, I appreciate the opportunity. It's always fun to come on late at night and get up and get jazzed to talk to the community. So I appreciate everyone coming out. Um, Tonight we're going to be talking about trusting the process, part two. And like Dave mentioned, the reason that this kept sticking in my mind, and then trying to wrap my arms around what is it that if a new trader came in here, what were we like 12 or 13 months ago, and what are we like now? So in March of 2023, I presented the first class on this topic. It was called Trust the Process. And it was a Wednesday night class, just like this. And the idea of trusting the process, now almost 12 months later, here we are. So the shortest introduction possible. My name is Pete Edmondson, also known as Referee Pete. I've been a part of Trade the Fund and trading currencies since 2021. I became a hot seater in February of 2023, so 12 months ago. And I have been a live prop firm funded trader since December of this past year. So trading doesn't get harder. It's just you getting stronger. So
I like it.
that's what
Wait,
we're
before you
working
jump
towards
from
every
the
year.
slide, you got to tell us something that we may not know about you.
All right. I don't know. So you may not know that I was also the mayor of my town for 6 years.
That's right. I
There, there,
you did
there
know
you
that.
go.
Did you guys know that? He was Mayor Pete.
I was a small horse.
I did.
All right. So trust in the process. Part two. So we're going to talk about three things tonight. Part one is going to be what is trust in the process. We're going to review what we do every day in the live trading sessions. What is our method? When somebody new comes into the trade the fund, or when we're talking with our friends, we should be able to communicate with them. What exactly is our strategy? What's our method? And in part one, we're going to talk about what trust the process was for us 12 months ago. And then as the evolution of our group continued to grow, what does that look like now? What is part two? And then we're gonna jump into some charts. We're gonna see what does our process look like today in our trading sessions. And what can you expect as a trader with us, a part of our group, Trade the Fund? So part one, the early years, or the wonder years, if you will. So if we take a stroll down memory lane back in February of 2023, I joined the hot seat, and on the 27th of February, I had my very first hot seat session with Dave. And in that session, I don't know if you remember, Dave, but we caught a ride the wave, and I hit 4.19% in my first session.
That's a little better.
So this is a picture of me and Dave. That's me on the right. And
I was gonna say, is that when you had hair? That's when Pete had hair.
Look at little Dave, so cute. That's him in glasses on the left. Yep. And so those were the early times in the Trade the Fund. They were the wonder years for us. In March of 2023, during our first Trust the Process class, we talked about what does that process mean if we were going to define it. So what happens to our accounts? How much would they be expected to grow? What should we be expecting day in and day out? And what do we have to do to adhere to that process? So one of the things we did is we went over some I statements, and we said things like, okay, I accept that I am not going to know where the market is going today. I'm not going to know where it's going to go in the next hour, and sometimes not even the next 5 minutes. We had to come to grips with that as part of our process. We had to say things like, I'm never going to be 100% correct in my guess or prediction. And with our method, I actually don't have to be completely right in order to be successful in that trading session. So that is an incredible I statement for our process. It's a little bit different, I would say, than anyone else outside of our group. Now, being comfortable in the uncomfortable. I mentioned last time that as we trade through our method, we're going to learn how to be comfortable in those uncomfortable situations. So for example, as the market moves away from us, and as we've left our early game and we are coming into the end of our mid game, and as price is knocking on the door to the outside range, kind of like it happened to a lot of us this morning, that is an uncomfortable situation. But we've learned as a part of our process not to freak out, not to hit the red X, but to learn how to be comfortable in that uncomfortable situation, because sometimes that's part of our process. We know how to work out of it. We know how to manage our position. And we don't talk a lot about this anymore, about being comfortable in that uncomfortable spot. But a lot of what we do still talk about, last year, 12 months ago, we were talking about price cycles. That's a cornerstone of our method. We were talking about action points. We were talking about the 1, 2, 3s. We would open up the charts every morning, and Dave's first question would be, hey, what are the 1, 2, 3s? What's the trend? What's the bias? What's the price cycle, right? So we were on top of a lot of this stuff. Position sizing. This wasn't something that just came about last month or 2 months ago. We talked about position sizing. The concept of PTP was born right around that first or second session of my hot seat career. Proper trade placement. That was something that Dave picked up on, and the star is born. PTP, yeah, you know me.
Can we get the backstory in that? I feel like there's a backstory there. Sure.
And you can hit up JBab. I think he was the one that just had a horrible PTP. No, it was me. I knew when I joined as a hot seater that I was A, not ready to perform in front of a live studio audience, and B, I had a proclivity to jump in and put trades on willy-nilly, but I could not define and really narrow down what that problem was. And Dave saw it right in that first session, right in the second session. He says, dude, you're putting trades here, and here. That is not proper trade placement. You have bad PTP. And of course, what is it? Run DMC. You down with OPP? Yeah, you know me. So there we go. PTP. Yeah, you know me.
And PTP was born, and I don't think there's a day that we don't talk about it in our hot seat sessions. I really don't. I think it's an everyday process because not only did you suffer from it, but it was like contagious or something.
Well, and I brought this up in the hot seat instructor class on Tuesday. This is PTB is something that you have to be on top of every minute of your session. The moment that you get lackadaisical and you have this bravado of that the market isn't going to burn you, that PTP will come back and it will ruin the trajectory of your equity curve that day. And it'll happen fast. So as much as we joke about it, that is a dangerous knife to try and catch when you throw it in the air. We've talked about the rule of three way back when. We talked about 3 attempts. We had a focus on 50% retracement of the candle or 50% of the move. And some of these things, as I look back on that old presentation, I don't remember us talking a lot about 3 attempts or 50%. And so it's so funny that that's such a huge focus for us, even in the last couple classes, 50% retracement of the candle, 50% of the move. And then we did a lot of win while losing. Well, we were actively winning while losing. We were managing our trade, picking and popping. And here's one, the belay trade. We would, entering the summer, there was a lot of times when we would use the belay trade. And then as the market shifted and the seasons changed, so to speak, we stopped using that belay trade. And as time went on, our trading community had grown along with the evolution of our understanding of the market. So new terms and new concepts have entered our group. And so these cute little kids, let's see if I can annotate and take there we go, Mr. Hunter's mustaches off. These cute little kids, they grew up and the wonder years have become now the now years. So there's me on the right. I don't look too different than my original picture, but Dave, he lost his glasses. He grew up. These are the now years. And a part of the now years, our 3 and 50 method was born. Again, Dave was able to take all of the information that we were talking about, and he was able to bring it down into a term that we could understand and learn and study, and it's the 3 and 50 method. So in this 3 and 50 method, we are now talking about market structure. The 1, 2, 3s has now evolved into, hey, let's open up the chart. Let's look at market structure. We're talking over this at the beginning of each session. And this is quite possibly the most important part of the day after we collect the pips in our cup. KPIs. Back in February and March, we did not know as deeply as we do now what a key price indicator is, right? So KPIs finally joined our dictionary of terms, and our trading has really taken off to a whole new level. Proper trade placement is still a part of our everyday lexicon. We still use price cycles. It's still part of our method. It's still the reason that we can win while lose. And again, 50-50 at the 50. Look at the evolution of 50-50 at the 50 as opposed to, let's look at 50% retracements. So there's 50% everywhere in the market and everywhere in our 3 and 50 method. We still have action points. We still have position size. All of those tools that we're learning to master, this is part 2. This is the evolution of how we've moved and grown as a trade to fund group to give us all of the tools we need to become a profitable and funded trader. So let's briefly go through these. This is still part 2, market structure. We all know that there are 3 different types of markets. There's a trending market, there's a ranging market, there's an outside range. So later on, we're gonna go look at some charts and see some differences there. KPIs. We should be able to identify and we should be able to explain what is a KPI. As simple as I can put it, the price or the area on the chart where our original move is done and no longer valid. If we're in a channel and it breaks out of that channel and that candle closes and it leaves, that move is done. The KPI is broken. Are we in a range? Did it do the 1, 2, 3s and take off? It's not coming back. The KPI has been broken. Was there a pullback? Is the pullback over? Is the KPI been broken? So that it is such an important concept to understand. And once you see, now you can put that into your 3 and 50 method and trade with a little bit more confidence. Proper trade placement. We've said this 2, 3, 4 times already this evening. Never enter a trade at the end of a price cycle in the same direction. That is PTP 101. Price cycles. We love the EU. We know that it behaves when it's in its normal behavior, it will move in a fractal manner, and it's going to go in and out of 1 to 3 price cycle moves. We know that it'll go 1 price cycle up and it'll go 1 down, and it might go 2 up and 1 down and 3 up and 1 down. We know that that's normal behavior for the EU. We also know that if it's in normal behavior, it is an 80% market. And so you're now going to hear us explain whether today's a 20% market, beware, or today's an 80% market. And that's something that we've really learned. A lot of the times we've learned the hard way. But that's part of the evolution from 12 months of trading every day, being in the hot seat, talking with each other, comparing notes, seeing patterns, seeing the market, how it acts in the spring, in the summer, in the fall, in the winter, and now in the spring again, right? 50-50 at the 50. We're seeing with more clarity how candles retrace, how moves retrace on that time frame. We can look at the current price. Is it above or below the 50% of the fib? Is it below the 50% of the channel? How does that give us a short-term bias? 50% of the Brandon candle, my favorite candle of them all. We love the Brandon candle, and this did not exist 12 months ago.
I feel like there's a backstory there.
Let me just let that sit there. So we love our group so much that at one point, I don't know how it was born. Was it during Brandon's hot seat?
I have no idea. I don't really know.
So we started to see these candles shoot up, and it was originally a part of our like a high probability trade where you'd have price and a candle of unusual size, and we would always joke about the COUSs, and then somehow we would talk about smacking the candle, and somehow we named it Brandon, and we would smack the Brandon. And so now that is a part of our trade process, our 3 and 50 method, the 50% retracement of the Brandon candle. And you're going to see later how that has even been woven into the EA systems. And then obviously we have 50% of the news candle. So there's so many things going on with 50-50 at the 50 that we didn't even realize 12 months ago. Action points. We knew that we should get out or hold, but now we've really been able to identify how do we recycle on the first. There's an action point. Should we hold on the second? There's an action point there. Are we adding for the third attempt? And also, as we've started to mature in our night trade setups, we're actually using action points to forecast where could the market go next before it hits its next action point. Now, in other communities, other trading groups, I think a lot of times support and resistance could also be shown as action points, and supply and demand zones can be shown or considered action points. But some action points are actually more important or stronger or less important than others. But for us, action points can be very important when looking for and setting up overnight setups. And like I said, forecasting, is there a 20 to 40 pip gap between the next action points? And can we hit goal inside of that? Position size. This has definitely been helpful, as we've always find ourselves in different size accounts. How many of us have Forex a Forex and we have a 10K account plus a 25 plus a 50K, maybe a 100K account? And so position size really has helped us hone in for ourselves. We can look at that hot seat trader and say, what is your early game? How many trades? What is your mid game? And what is your late game? From there, we can set up our plan A, we can set up our plan B, and we can set up our plan C later. So as we've evolved here, Dave and the tech guys have done just an amazing job setting up EAs. We've learned how to manage our break-even line, to use that to our advantage. We've added a goal line that shows us exactly where, again, when you think about action points, is our goal, is it underneath an action point where the market can get to easily? And also through our EAs, we're able to secure our trade. We don't have to set up a trailing stop. We don't have to close all. We don't have to cut our profits short. It's an amazing advantage. And like a lot of us would agree, we'd have a super inefficient time trading without our EAs because it's such a great tool for us. So that's part two. That was where we started from, part one, how we've matured and evolved, and now part three. So we're going to look at the charts, and I've taken some screenshots here, and we're going to look at market structure. This is a nice little channel. So the market had come from here, and now here we are. It came up. It started to, so somewhere over here, it broke out of the range, came up. And now what I'm asking you to consider is, based off of this channel, where do you see the market going next? I have a number one here. There's 8 of these slides. And you don't have to, if you don't want to, you don't have to draw on the chart, but to even look at this and go, ha, 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 ha. Ah, thanks, Josh. Aside from it going right, if you were to forecast, what is the probability, where is it going next based off of this information? Here's our next slide. Okay. Now look at this information.
What's the time frame? Does it matter?
Haha, great question. I will tell you at the end of slide 8. All right, so the difference between the first slide where we saw this price and then this here, now we're going to the next slide. And again, like you don't have to draw on this, but where do you think it's going next? So there's our next slide. There's our next slide. Thanks, Josh. Josh, you nailed it. Wow. Okay. So now you open up your charts and here's the price. Where do you think it's going next? Here's our next slide. Here's our next slide. This is all market structure. We open up our charts and we see this and we're going, oh, okay, it's in a channel. Now where's it going? So we've got market structure there. And here's our last slide. And the reason I started to cut that apart is, as much as we try to follow patterns, and to answer Dave's question, this was the day chart, and this was the EU. And as much as we look at market structure, we can start to identify from here our next component, which is the key price indicator. Now, if you notice the difference between these two slides, this is the same chart. So as you would identify potential KPI, and when I draw channels, I like to draw the midline. But if we're sitting in our chart and we're sitting here at the beginning of our trade session, you can be sure that we're identifying this as a KPI. If it breaks through here, again, this is the day chart, but also this could be the 1 minute, it could be the 5 minute, it could be the hour. If it breaks through this KPI, this channel is no longer valid for our time and for our trading session. If you look at even opening up the chart here, you open up the chart here, it's in a sideways range. If it breaks below or if it breaks above, this was the KPI. Coming over here, we've got prices sitting right here. If it breaks above, if it comes down and closes below, this is the KPI for sells in a potential M. And if it pulls back here and keeps going and breaks, there's the KPI for buys. So you're always asking yourself, if I think that the current move is going to go here next, where does it fail and is no longer valid? Here's a bigger shot of it. I wasn't sure if it was going to come through or not, granular wise, but all through here, you've got some potential chart patterns. If we're sitting here, we're identifying a flag and a pull. If it breaks through here, that's that KPI in that channel. And if it continues on, so that KPI has grown to become just an amazing tool for us throughout these last 12 months. I'm going to bring up the big screen again. So proper trade placement. If we're looking at price cycles, and we've got let's see, price cycle, and we open up the chart and we're sitting here. Proper trade placement means that we're not putting a sell right here. We're letting it come back if we're adding sells. If it breaks the KPI, now we're switching here. So PTP should save us from the ends of moves. It should be that red flag. If you've got your channel coming down here and it breaks out and goes sideways, that is your get out zone. And so on the KPI, if you're here and you're putting sells thinking that you're going to chase the market and you're putting sells at the bottom of a price cycle, that is the bad PTP. And again, let's look at price cycles. Here's our 80%, 20%. Is the market behaving? So all through here we have 2 down, 1 up, 2 down, 1 up, 2 down, 1 up, 1, 1, 1, 2, 1, 1, 1. This market is behaving. If we're at 1, 1, 1, 1 and it shoots up and leaves and never comes back, that's a 20% market. The market is not it's not acting kindly. Here's another fun one that once you start identifying, this will, especially identifying on the charts, this will really help. Take a look at all the candles here that retrace at least 50%. So if we start with this candle here, so this move breaks out, did this move on the breakout, did it retrace back 50%? It looks like it did. It actually came back 100%. Okay. If we even look at down here, we've got price here, price shoots up, it breaks out. So did this candle come back? Did this candle come back 50% of this big candle? Yeah, 50%, 50%, 50%. So candles, if you look at the hour chart, candles retracing them on themselves over and over and over and over and over again, if you are patient enough to let them work. Now, how about 50% of a move? Did the market come back 50% before it took off again? It sure did. It sure did. What about this move? Did the market come back 50% of this move? It sure did. Did market come back 50% of this move? Sure did. Did market come back 50% of this move? It sure did. Did market come back 50% of this move? Sure did. Sure did. It sure did. It sure did. So if you are able to manage your position size on the 50% retracements, you have action points to get in, action points to get out, or action points to hold. So action points. All right, so I've got half the chart, and I'm going to show the rest of the chart next. And again, these are things that tools that we've used for the past 12, 13 months, and now we can turn around and retrain others and show them exactly what's going on here. All right, so let's look at some action points. So we've got action points here. If I'm setting up action points on the way down here, so we've got action points. And right now I'm just starting out. Good job there, picking out action points, Again, where the market can easily go to, okay, action points. And so as these become action points in the future, do they continue on? We have this action point coming through here. We've got this action point coming through here. It popped up, came back down. We have this action point came through here. So looking at action points from the past, a lot of times will help dictate the future. And again, the big action points are quite simply supply and demand zones, support and resistance. So this isn't any new rocket science, but if this is a 5-minute chart, all of these moves here, the green space, the wide open space between these action points, that is where we can let our trades mature and ride and go off to college and graduate and come back with certificates. All right, how about position size? Again, back in 12 months ago, we were focusing in on layers, focusing in on how many bullets we had, focusing in on our when do we have to hit our red X, how do we control our risk. Now, understanding that if I'm comfortable with 10 to 20 trades in my early game and 20 to 40 in my mid game, well, multiplying that out, is it times 0.5 a trade? Is it times 0.10 a trade? Is it times 0.25 a trade? Are you in a 10K account? Are you in a 25K account? Are you in a 100K account? All of that information helps to keep you in early game and helps you to take advantage of high probability trade setups. It helps us formulate plan A. It helps us understand when we're entering plan B, and it helps us understand when the KPI has been broken, you're starting to enter late game. Late game is not working, and it's time to hit the ejector seat and plan see you later. All of that has come about through months and months and months of hard work in the seat. Okay, part 3, what to expect as a member of Trade the Fund. So first of all, you're going to expect to see what's done. You expect to see the trading sessions, see us trade live. Then you can expect that you're going to actually do one. You're going to jump in the seat. You're going to be in the decision maker spot. And then eventually, as you grow as a trader, you're going to teach. And so see one, do one, teach one. That's what we do here. The instructor teaches the hot seat trader how to trade. The instructor teaches the hot seat trader how to become an instructor. And new instructor teaches newer hot seat trader how to trade. Not sure what that says. Here's the other thing you can expect.
It's our motto.
That's our motto. That's a motto. Thank you. All right. So as you join Trade the Fund, you can expect that you will have access to education. These are our current courses: Forex Your Forex, the 3 and 50 Fibonacci series, the price action, and the ride the wave. You can expect to jump in with us every New York session, Monday through Friday, live trading. You can expect that you have available to you an early bird session 4 to 5 days a week, a hot seat session 5 days a week. Now a Cool Kids overnight trade setup at least one night a week. Wednesday night class to learn, fast track class, tech support. All of that is what you can expect to help you on your journey. And one of the best parts that has really advanced of waking up is you've got Talon, you've got Anubis, and one of my favorite buttons of all is the Brandon candle right there, the Brandon candle. So those are the things that you can expect as you join us and come in here. Consistency. Let's talk about this for a second. We have had 92 individual trading sessions, individual hot seat trading sessions from September up until counting yesterday. Today's stats are not included. We have a net gain of 38% in those hot seat trading sessions from the main trading account. We have had 86 winning days, 6 losing days, and a 93% win rate per day. Not inside of the day, the 93% win rate for the trades, but the number of days that we have won is a 93% win rate. 74 of our days have Forexed our Forex, meaning that we have not just won the day in a single account, but we have copy traded into multiple other accounts, averaging that rate of return of 1.6% a day. Keep in mind, this isn't just our guru, our wizard of wizardry. It's not just Dave sitting and pushing buttons for the hot seat traders. No, no, no. It's not just one single trader. There has been over 30 different hot seat traders in those 92 trading days. And there has been 6 different instructors since December all the way up to now. That is a pretty amazing track record. That's what you can expect when you join Trade the Fund and when you take the journey with us and you're here for 3 months, 6 months, 9 months, 12 months. So here, the number one reason I have found for jumping in and subscribing to the 3 and 50 method, and it's this. When you utilize the 3 and 50 method, we can be wrong in our initial analysis. Okay, we can be wrong in our current position. Okay, and we can still end the current move. We can still end the current trading session, and we can still end the day in profit. When you compare what we do to the others around the YouTube internet family, a lot of times it can be a type of a coin flip trade. Price is coming down, it's coming into support. I'm going to put a trade here and I'm going to flip a coin, and it's either going to go up and I'm going to win money, or it's going to go down and I'm going to stop loss. But there's nothing that I can actively do once I place that trade. That is not what we do here. We are actively managing our trade. We are actively choosing to place trades at the proper placement, and we are actively choosing to either stay in, get out, or hold at action points. And we are actively choosing to secure trades. We're actively choosing all along the way. I love it. It's I think it's what drives our success, and it's going to continue. We're going to continue to evolve. So what next? Well, join us on our prop firm Forex Your Forex Road to $1 Million Challenge. And the reason I bring this up is in one of my new accounts, I have chosen to couple that into the hot seat. So next Monday, I'm starting a fresh account, and I'm going to group that into whichever group I have open, and I'm going to trade that only in the hot seat session. So what we have found is as we've looked through our tracking of the weeks, Dave has mentioned this in almost every trading session. If you were to follow along with us, if you were to take the same trades as us, these are the percentage gains that you would be able to achieve. And so I'm going to take one of my challenge accounts. I'm not going to set up night trades, and I'm not going to trade outside the hot seat beforehand or after. And I'm going to couple it to this, and we're going to see how far this 0.25% takes us. So if you're in an 8% phase 1 challenge, if our goal is 0.25 a day as that secured minimum, it should take us 32 days to get through our first 8% hot seat challenge. So, questions, comments, things to add. What did I miss about the evolution of our trusting the process?
The break-even line.
Oh, he said the break-even line. for sure.
Oh.
That's been a big one.
That's a big
Yeah.
thing, the break even line.
I'm impressed, Pete. You really brought it all together. It's kind
Yeah.
of fun to see that. I mean, for some of us, obviously myself, but I'm sure others who have been in it as long as you have, to seen the progression, the evolution, and a lot of that, majority of that, is because of the community. And I think that's the only part that I would probably say you might have missed, but there's a strong
Mm.
part, is the community, right?
Yeah.
I was just telling this to somebody that the best part of what we're built here is that we look forward to trading with one another every single day, right? And we lift each other up when things are not going so good. I've seen it on Discord. Hey, we've been there, we've all been there, and we celebrate in each other's successes, right? And it makes it fun to be a part of a community that is really, you feel like you want to trade every single day. Trading can be ridiculously lonely if you if you have nobody to trade with, right? Every single day. And it just helps us to get better and better. And every single one of those things, the PTP, the KPI, the break even line, the goal line, all those kinds of things were ideas that were generated from the community. You know what I mean? And then just brought to life from us. And so it's amazing to see how far that we've come, and it's just kind of fun to see that. So I appreciate you taking us on a kind of a progress, you know, looking back and seeing where we're at. And it's amazing that it's been a year. It feels like it's been a long time, longer than that, but in another way, it feels like it's been a lot shorter, right?
Yeah.
And my personal journey, my personal journey is that can we shorten that learning curve, right? For traders, can we make them profitable sooner, faster? And so far, the answer has been yes, right?
Oh yeah.
And
Yeah. I
and
mean, whew.
it's shortening that learning curve, and I think you're a walking testimonial for that, right? I don't think I think you would be the first to say that if you had not been here every day in the past year, you would probably not be where you're at in your trading journey as far ahead as in your trading journey. Would you agree with that?
Yeah, and we've talked about this whenever this subject comes up, all of our hands go up. And I mean, you're so right about the community. Even as I went through and looked back at notes and looked back at prior classes we've done, and then realizing just the how much we've enjoyed each other. The whether it's the nicknames or the bloopers or the Brandon button, the Brandon candle. I mean, everybody has played a part, and it's been just uh, yeah, it's something that you look forward to. You lean on each other. You're rooting for each other's success, and and like you said, if somebody's coming in January 1st, what an advantage! What a great time to be joining us and to be helped along by this community that has already gone through the rough patches. They've already gone through the what's it called when you
Kind of growing pains, if you will,
yeah,
where
yeah,
you just kind of
like
figuring out the
version 1,
system.
version 2 of the
Hmm.
EAs. I mean, all of that, the beta. We've already gone through the early stages of the hot seat beta, and now beta testing, and now things are ironed out, more than they ever have been, and there's a vision, and we're just can continue to build up traders and build up instructors to build up other traders. So that's the best thing I've seen around.
So I got to ask, in putting this presentation together, how did it, what were some of your thoughts as you're putting this together, and you're like, wow, because I mean, there's so much that you have learned that, and when you put it all together, what were some of your thoughts by just grabbing everything and then putting it on, you
Yeah.
know what I mean? Putting it all together, right?
Well, I mean, this almost became a state of the trade to fund, right? 12
Hmm.
months, and what's it going to look like in 12 months? And
Right.
I should jump on the calendar and mark it for 12 months from now. But because I lived through it with you, and with, again, those original, those OG, whether it's Kovashi and Duke and Josh and Brandon and even Jared and who else am I forgetting back there? But I went back and looked at some of those the old hot seaters as well, and some life gets in the way, and B-Rad is sitting out there, and Josh Madriga is sitting out there, and they'll come back, and when things settle down for them, and so there's been, it really was it wasn't frustrating to put this together. It really was a little bit of a labor of love and being like, yeah, this is all of these things that we used to do. Here's what they grew into, and so I can't wait to share it. And so here it is. I think the biggest things that have helped us as traders has been the understanding of the market structure, the KPI. I mean, it's, you can rattle them off now. The action points, the PTP. If we knew way back then how vital PTP is, even today's session, PTP is always there. And I realized it's there every minute of every session that you're in the market.
I just got done filming a video today that I'm gonna be posting to YouTube that it asks and answers the question: if you had to start over from square one trading in 2024, what would you say would be your top things that you would say to yourself as a trader or somebody that is brand spanking new that that would help them? If you were putting together that video, what would you say? If you had to start all over from scratch, what would you say would be the where you would point somebody to start?
Well, I know one of the things that was always in the back of my mind, and I kept striving for, and I keep striving for. It's not like I've mastered this. It was that the market was telling a story, and there's information out there that can help you understand what the story is. And when I first jumped into trading, I mean, it was so schizophrenic, scared. It was, I'm guessing for the price here. Oh no, get out. Oh no, get back in. Oh no, get out. And I had absolutely no idea of everything that we do each day. And so the first thing I would tell that new trader is, hey, there is a flow to the market. It does tell a story, and you can get on the right side of the order flow, but also you don't have to be right. If you follow a method like the 3 and 50, you can be successful. So that'd be kind of like a 30,000 foot level, and say, there is a little bit of a rhyme 80% of the time.
My thought was, if I was giving advice to somebody starting out brand new and, again, trying to be unbiased as possible, just from a 30,000 foot view, I would say exactly what your presentation was. And there's probably 6 things that I would tell a trader to do. And the first 3 is learn PTP, learn KPIs, and learn price cycles. Those are the first 3 things that I would learn in the market. Once I have those down, the next thing that I would tell them to do is buy a prop firm account so you start working on live accounts. Join a community, right? Join a community, and then find a mentor. And if I was saying, if you want to learn how to trade Forex or any instrument out there, this is the model that I would probably tell somebody to do brand new. And it's kind of like you just kind of presented that, saying, this is what we do.
Yeah.
It's like you presented that and showed the facts that not only do we do it, but what was it, like 90 something percent successful, right? And I'm 80% sure that beats Josh math.
Well, and I guess the other thing that you hit on was, we did that in class as a community, observing. It wasn't one person in a vacuum talking to a camera with no community around them. And so like that has just a huge boost to to what we do is the community was there. And whether it wasn't just here's Dave and he's the guru and he's clicking and no one else can do it. No, you were sitting down with every one of us in the community, and the rest of us were observing and learning and asking questions and growing together.
And we've had a huge metamorphosis of, I used to trade. It was me every day that I trade in front of you guys, and I would trade my accounts, and I would grow from 5,000 to 50,000. And then I'm like, well, I think it was you. It might have been a group of people that just told me they were frustrated by seeing my returns because they can never do it themselves.
Nah, I didn't
And
say that.
I kind of hit me hard by like, I was in your shoes at one point, and I remember feeling, maybe not you, but I remember feeling the exact same way, watching my mentor hit all these huge returns. And I'm like, it's not real to me because I can't do it. And so that was kind of like the switch that flipped, that says, well, let's put you in and let's make it reality. You know what I mean? And that's how the evolution of the hot seat was born. And I love it. I think it's
Gabe,
the best way to learn.
I thought it
Ye-
came out. I thought it came out of when you and a couple of friends said you were taking 5,000 to 50,000, and if we wanted to join, that's what I remember.
I was a little different. That was me just trading I was honestly just trading with like 5 buddies of mine. And then I said, hey, I opened it up for people to watch us trade. And I was trying to teach them how to trade. And they were brand spanking new traders, right? So, but that was a little different. But anyways, I am grateful for the community. I am grateful for the community because without you guys, um, a lot of this evolution process would never have existed, right?
Wait. So did you lose your first student?
No, because my dad still trades with us.
Your dad.
Every morning.
Yeah, he hits go way before you do.
He's not on here, is he? Okay, good. He's sleeping. And by
That's
the
because
way,
he's
for
already
those-
hit goal.
yeah, good for those done. No, I'm gonna call him Pops. So whenever
Yeah.
you hear me say Pops. But no, yeah. But no, so anyways, anybody else have any questions for Pete? And somebody asked me this, and I think it might be a good idea. But I would probably ask Pete your journey in the last 12 months, your personal journey. You're funded with how many prop firms are you funded down with?
3.
Year 3, and you just opened up another one. So are you currently have 3 that you're working on, or do you have 3 that you're funded and others that you're trying to get funded? Like, how many are you working with?
Yeah, so I've got 17 prop firm accounts.
No, you don't. Do you really?
Yeah.
You have 17?
Is there something wrong with that?
No, I just
Or
welcome
wait,
to the
maybe
club.
hold on. Maybe it's 13. I've got 3 groups.
Okay, because I'm gonna have to get a couple more if you have
ABC.
17.
Yeah.
You can't
Never
beat
mind.
me.
I have 13. I had 12, and then I just got this new one that I'm starting on Monday. So I've got 3 groups: Group A, Group B, Group C. That's why you see me posting on the leaderboard. And it's Group A is the overnight, Group B is a 3 and 50, and Group C is a 3 and 50. So I go, whatever the overnight did, if I need to clean that up. And so I've got 1 funded account in each group, and then I've got 4 that are, I think I have 4 that are phase 2, and then the rest are in various stages of phase 1. And again, like as much as I can paint the picture, in my last trading presentation, we were talking about how to pass a prop firm challenge. And what I pointed out there was, along this trading journey, as you are getting more and more disciplined, you take 1 step forward and then 1 step back. And then next, you'll take 2 steps forward and 1 step back. And as you continue to grow and grow, you will then take 3 steps forward, but you are always going to have 1 step back. And so I am sitting right on this line. I had a phase 2 account that was 0.92% away from being funded, and I took a 2.5% loss in that group, and it has now come back, and that was the one that last week finally tipped over into the new funded. So I'm not bulletproof. None of us are. Many days I feel like I'm taking 2 steps forward, 1 step back, and other days we feel like we're taking 3 steps forward, and then we end up with 1 and 1 again. So where I'm
You
at
know-
right now, again, the goal is for, if I've got 4, 6, and 2, it's going to be 3. I want these to get into this phase 2, and I want these to get into funded, and then I want these to get into funded, and I want to get more phase 1s. And that's how we take our 0.25 a day, and we build our accounts up to $1 million. And a simple calculator says that $1 million of live funded prop firm account is $2,500 a day, and we can be generous and say 4 days a week and 4 weeks a month, and 0.25, even if you half that amount to 0.10 or 0.15, that is our ultimate prop firm challenge goal. And we do that by moving from 1 step forward to 2 steps forward, and eventually to 3 steps forward.
So we can probably have an entire Wednesday night class on here on what you just talked about. But for me personally, I want to ask you this question. Since you have crossed the threshold of 10 prop firm accounts that you're trading, or 10 plus, the number's still vague out there, whether you have 13, 17, 10, I don't know. But the question is, how has that changed your psychology in trading prop firms?
Well, when we started out, because again, the one that I just passed, it took 41 days, and it was a 10% account for phase 1. It wasn't an 8%. It was one of my so it was like December, early part of December. I don't remember which day. So 41 days divided by 10% is like 0.33 or 0.37 a day. So it averaged over 0.25% a day. But way back when we started this in September, we did 10K, 10K, 10K. Now, mind you, I think I was one of the first ones that got rid of all demo accounts and went all live trading all the time. So all of these accounts, I've got the 3 groups of 4, so I have the 12, and then I have the new one that's starting. All of these are funded accounts. So the psychology is there, where I needed to get rid of the boats. I needed to burn the boats. I needed to walk on shore, and I needed to attack in funded accounts. That, I think, honed the desire and the skill set. The other thing that was a great motivation for me was, let's see if I can pull this bad mamma jamma up. The other thing that was a great motivation for me was posting to the leaderboard. And so I simply
look, you're second place. Are you sure you want to show that?
I simply hey,
No,
I'm
he's
glad.
first place loser.
I'm glad
he's the
Remy
first
isn't.
loser.
Hey, you know what? After, I mean, I'm so tired of winning. I mean, it's like 5, 6 months in a row. But no, joking aside, all I looked at was posting to this right here. I didn't care about percentages, because others are posting great percentages, and others are posting great days. But I'm just trucking along, three groups all making 1%. And they're coming in at 2 to 3% a day. The only thing that I scratched my head about was, it appears that somebody did not count my January stats. Dave, do you know anything about that?
No, I would not know anything about it.
This was
at all.
December, and I went through 20. Okay, anyway. So all I'm saying is
open a ticket.
Thank you. All I'm saying is, my motivation is, I'm looking at daily percentage. I'm not looking at the live funded real money, because the money will take care of itself at 0.25%. So when maybe this is not what you were originally asking me, but I'm always looking at my daily percent. I'm never looking at the profit because I think that will freak me out, especially when I've got $680,000 in prop
capital.
firm, yeah, capital plus the new one coming on. So I'll have 780, and like you will it will affect you psychologically unless you stay in your original. What I like to do is I stay in my original account because I know exactly where I need to be for my position sizes and for my early, mid, and late game. So that'd be my advice: is continue to focus on this, continue to post in your groups to try and hit your 1% cumulative, and don't worry about everything else. Everything else in 30 days, in 40 days, it will take care of itself.
I think the point that I was trying to make, or that I
Yeah,
was
sorry.
trying to allude to, was that once you kind of cross that threshold, and that number is intrinsic of how many accounts that you have, but it's more than one, right? If you had one account that you were trading with, one prop firm company, well, all your eggs are in that one. And if you lose it psychologically, that could be damaging, or hurt of all that time and effort and energy that you put in, right? But and that's the same thing if you have four and you're trading them all with the same group. What I found is that when I broke them up and I started having 3 or 4 groups, it's not that my care factor diminished. I still cared tremendously about the accounts. But if I had lost one, and I did lose one in December, it was like, all right, I'll just replace it. Do you know what I mean? It wasn't that big of
Yeah.
a deal because I still had money coming in, I still had income coming in, still had paydays, and I lost one account, and I'm just like, all right, I'll just replace it, because you're going to have those days that you're going to lose it. But if you only had one and you took you 60 days, you get it, and then you lose it, that could be a gut punch. And so I was like, how, and honestly, you're kind of the first person that is starting to trade the groups and all that. So that's what I was like, have you noticed that with your trading as well, where you're not so eggs in one basket and tunnel vision on that one account? Do you know what I mean? And it kind of
Yeah.
helps with that psychology of trading, right? When you have multiple accounts.
Right. And the temptation is, if you've got 3 groups, the temptation is, hey, you know what? I'm going to open all these up because I have 3 parents, and I'm going to do the same night trade setup, and then I'm going to wake up and I'm going to have 1% times 12 accounts. Well, okay, so I got to temper expectations, and I just need to operate on one account because you've got to be responsible, and you can't let greed seep in there. So if I wake up in the morning and this account is negative 0.25 right now, and it's active because there's active trades, okay, well, this is a lot easier to work with and work out of than these accounts. And even this morning, I finished up goal in the early morning session, right at the top of the hour, and then we switched class. Then opened up here and got in the hot seat and did 3 and 50, and then did 3 and 50 again. And there was a lot of other people that did it, and we're done. And you're not trading till noon, 1, 2, 3 o'clock in the afternoon. And there's something really refreshing about starting at 0 and going to 0.25, because you're able to catch action points and you catch a move, and all of a sudden you secure it and it goes to 0.32, and they're like, well, okay, move on to the next group.
That's awesome. So I appreciate, I mean, again, this has nothing really to do with what you came to talk about tonight. But again, we could have a whole class on that. And it's awesome to see your progress. It's awesome to see other people's progress. The road to a million is about getting everybody there over the course of 12 months where you're at, right? And getting $1 million in trading capital, and we have multiple groups, and we're hitting 0.25% a day every single day. I firmly believe that we have the community that can do it. We have the hot seat traders that can do it, the fast trackers that can do it. And if you guys just follow along in the hot seat, and take, just if you're brand new or whatever, uh take the same trades we take, and we'll all get to there together, right? And so I'm excited for the journey. You got me pumped up about what we're doing. So thanks,
Woo!
Pete. I want to buy now. Where can I sign up? Yeah, that's kind of in the comments. There's like, I want to buy again. You, you sold me. How can I sign up? I take Dave dollars.
There you go. There you go. Hey,
Appreciate
I
it.
really appreciate you giving me the platform. We try to keep it under an hour. And I was definitely see all you guys tomorrow morning. And who do we got tomorrow? Who's the instructor and who's the hot seater?
I believe we have William.
Will I am?
And I think are you here if you're in tomorrow? Is it? I'm not sure 100%.
Yeah,
But
I
if you're
thought
here,
William
raise.
said he was volunteering, but I don't remember
No,
who
it
the
is
hot seater
William. I'm
is.
talking about who's the trader. Yeah, I was gonna say I thought it was Lee, but I didn't want to call you out, Lee, if it wasn't you. So it's Lee Tracy tomorrow.
All right, there you go.
So get excited. We'll
Yeah.
we'll get after it tomorrow. So thank you guys. Thank you, Pete. Thank you for everybody. And we will see you guys in the morning for some goal setting, crushing, clobbering, and canoodling with our trades. So we love it. So thanks, guys, and we'll talk to you tomorrow.
You haven't, Pete.
Hey, good night.